So much has happened over the last 2 years, and many people are simply confused at what it all means. What's going on with the job situation? What's happening with the central banks and interest rates? What will happen to real estate? Should I buy now? Should I sell? All of these questions are really important, of course, because they mean a lot to you. If you look at what's going on in detail, as I will show you here in this video, you're going to understand that. You're going to be able to know how to pinpoint that and why. Why must we understand this? All of that, I'll break it down right here. Today, we're going to talk about the impact of interest rates on the financial markets and what we should be aware of in the current environment. First, we need to understand that interest rates are currently at near the peak rate, which the Federal Reserve will raise to. Investors are expecting minimal increases and are hoping for rate cuts soon. As a result, everything is priced accordingly in this stock market, and if the Federal Reserve increases interest rates beyond the expectations of investors, markets will fall. Expectations are crucial, and this is especially true when it comes to inflation and jobs numbers. Markets price in based on these expectations. Now, what is the Federal Reserve concerned about? Inflation has been hotter than expected, and the pace at which it has declined has been slower than they thought it would be. Many analysts agree that the only solution to higher inflation is higher interest rates. However, this also means that markets will suffer as a result. With so much debt in the financial system right now, it's concerning as interest rates rise. Investors have become accustomed to low interest rates, and as a result, borrowing costs were lower. However, now they're more expensive, leading to significant concerns if that does change soon. Markets have so far ignored the Federal Reserve's suggestions that rates will stay up for a while. Pricing everything to perfection is dangerous. So what can we do in this current environment? It's essential to look at our investments and see if they're using too much leverage. It's also crucial to be mindful of the margin on our stocks. Using leverage wisely is critical, and it's better to grow slowly than to take extra risks. During a tightening cycle, we're fighting against the current. We want to pay down our debt, trim our losing investments, sell products and services that do well in tighter financial conditions, and invest in improving our skills and acquiring new ones. Reducing risk during difficult times is essential. It's also important to understand how interest rates work and how they impact the financial market. Historical examples have shown us that unexpected changes in interest rates can have significant impacts on the market. Every instance of rate hikes has been met with a downturn. Therefore, it's vital to keep an eye on interest rates, inflation numbers, and jobs numbers, as they're all indicators of the health of the economy. It is important that we understand the impact of interest rates on the financial markets. We must be mindful of the current state of interest rates and their impact on our investments directly. Using leverage wisely, paying down debt, trimming losing investments, and reducing risk are all critical at this point in the cycle. But for so many today, they ignore it all. What do we know for sure? What has come about in these last couple years? We know that they printed a lot of money. We know that they really can't get away with not printing a lot of money during these other easing cycles. When we go towards that, then it's the point where you want to invest in risk assets, because you know that's the direction, that's the trajectory. But if you see, we are in a tightening cycle at this time, so everything is a little bit more risky on your part as an investor. When they put pedal to the metal and they're easing like in 2020, it was very obvious that you're going to see some crazy things happen. You had dog coins that were suddenly worth millions of dollars. You had people buying homes that were absurdly priced. All of these activities would have been considered completely ridiculous just a year before. But the Federal Reserve and all central banks around the world did something they really never had before, and that was all in sync across the world, printing more money than they ever have, ever. So that never happened before. We've seen printing money, we've seen quantitative easing, but never at that level, all at the exact same time. So of course, that pushed the markets up. That made risk assets more attractive. And they're likely to do that again, but we're not in that zone yet. The markets are trying to get ahead of themselves. Investors are trying to say, hey, I want to buy into this because the price has come down by 50% and so on. You could try that, certainly, but it's not the point at which you want to go hand over fist into it. That's what I'm trying to tell you here. Look at leverage, not just you as an individual. I don't use margin. Does the company that you're invested in have a lot of leverage? What are they doing? You've got to look at their finances. I wrote this piece up right here as an explanation of all the points I want to hit, but I'm just summarizing to tell you that you must be careful of where your cash is, where your investments are, where your savings are, and never forget that what you're putting your money into, maybe that's not the most, attractive thing. As I said, you want to be, selling the things that are attractive during tightening cycles, during a recession. But that also means if you're buying a stock, those companies that are tried and true, that are always doing well, even during the difficult times, or at least better than some of the other stocks out there, or better than the average, because people always buy them anyway. Maybe they need shampoo, maybe they need their soap, maybe they need household items, but they don't need all those other luxuries. Well, then you could look at that. You see what I'm saying? You could be the one selling those products, creating those products or services that you offer, or you could be investing in the companies that do so. That's what we need to understand, where we've come since 2020 up until today. I wanted to keep this video very brief. I'm doing these type of videos now every day, trying to just explain something. So I write it out so I can get all my points organized, and then I can summarize that for you. These type of videos are the real financial education that I wish I would have done on a daily basis all throughout. Now, not many people will see these videos, and that's okay. I want to bring them to the people who are actually interested in financial education so that they can make the right investment choices. Perhaps you know somebody else out there that this would benefit. All you got to do is share this video with them. They're going to get the information they need. And don't forget to join me tomorrow for some more stuff that I've got planned. Definitely want to check it out. I'll see you then. Take care.